This is your technical update from the LMAX Exchange Research and Analytics Desk for Friday, April 17th, 2015. Euro dollar. So the euro has entered a period of correction and consolidation since basing out in March at 104.62 by that 12-year low. At this point, there is still room for some choppy consolidation and additional corrective upside before the market eventually turns lower in favor of a resumption of the broader underlying downtrend. An eventual break below 104.62 will open the door for a fresh downside extension towards that major barrier at parity. At this point, only a break back above 110.53, the high that we saw back on the 26th of March, would delay the current bearish outlook. Sterling dollar. So cable has enjoyed a nice little recovery over the past several sessions since basing out at 145.65. But ultimately, as you can see, the broader downtrend remains firmly intact, and at this point, only a break back above 151.65, the high that we saw back on the 18th of March, would compromise the current bearish outlook. Dollar yen. So dollar yen has been content on deferring to a period of consolidation over the past several weeks and months, though setbacks are continued to be expected to be very well supported ahead of 118, while an eventual break above the recent 7-year peak at 122.03 is favored for a fresh upside extension towards the 125 to 130 area further up. Ultimately, only back below the December low at 115.55 would compromise the highly constructive bullish outlook for dollar yen. Euro Swiss. So Euro Swiss continues to extend its declines off that recent recovery peak that we saw at 108.15 back in February, and the market is now focused on a potential retest of previous resistance from January, now turned support at 102.50. A break below 102.50 would open an acceleration back towards parity, while inability to take out 102.50 will suggest that the market is poised for a potential higher low in favor of a recovery back towards that recent 108.15 peak. Aussie dollar. So Aussie has enjoyed a bit of a recovery since basing out at 75.33, though the market continues to be locked within a well-defined downtrend and is in a period of more multi-day consolidation ahead of the next downside extension and bearish continuation. At this point, rally should be very well capped ahead of 79, while only a break back above 79.38, the high from the 24th of March, would delay the bearish outlook. Dollar CAD. So a bit of a development in dollar CAD this week, with the market taking out a multi-week consolidation that had been defined by a support at 123.50. The break below 123.50 has opened fresh weakness down towards the 121.40 area thus far, though any additional declines are seen very limited to or well supported ahead of the 119.120 area in favor of the next major medium-term higher low and fresh upside extension back towards and eventually above the 128.35 peak that we saw back on the 18th of March. Really, at this point, only a close below 119 would compromise the bullish structure. Kiwi dollar. So Kiwi has been in the process of consolidating and recovering a little bit in recent trade, though the market continues to show very solid resistance in the 7700s. At this point, only a break above 78.90, the high that we saw back on the 15th of January, would compromise the bearish outlook, while an eventual break back below 71.76 is favored towards the 65 area further down. SPX 500. So the S&P 500 remains highly constructive, with the market trading back above 2100 and just off recent record highs from February at 2120. However, the market has also showed signs of stalling out above 2100, and if the market can reverse lower and break eventually back below 2040, the low that we saw back on the 11th of March, this would suggest that a topping structure is in place and an acceleration to the downside can be expected. Gold. So gold continues to consolidate recent recovery gains, with the market breaking back above 1200 in recent trade. A break and push back above 1223 is now required to extend this current recovery, though the structure is looking more constructive after stalling out ahead of critical support from 2014 at 1131 several days back. At this point, any setback should continue to be very well supported above 1178, while only a break below would compromise the newly adopted bullish and constructive outlook for gold.